Hello everyone, we are now live. Hope you're all doing great. Just going to mention in the Discord that I'm now live as well. Okay, thank you for tuning in, everybody, on today's live session, or if you're watching the pre-recording, thank you again for tuning in. It's the 21st of June currently, Friday, 1:30 p.m. So what we're going to do, we're going to go through the dollar, go through GJ, GU, and we'll get some other pairs in there as well if we get time. If not, we'll pick up on the second afternoon session of today at 3:30. So without further ado, let's get into it. So on the dollar index, prices continued to push higher. So what I'm actually going to do, I'm going to get rid of this now. It's not very important as such, but you can see, how that was used as a catalyst for a pullback, as I spoke about. That's why I marked that on there. So prices continued high. We've now had another closure above this high right here. I do think we will continue higher to at least these areas, maybe even higher to take out these highs right here, relative equal highs. If we go on the daily time frame as well, we can see these highs there too. So if the momentum is to continue to the upside, chances are we're going to take this and come all the way up into here, potentially even reach here, because as we've spoken about many times before, from a monthly time frame, we can see we have an imbalance right there at the price of around 115 to 116, around that sort of area. And we've also got that high that was printed just below, so price could want to use that as liquidity in the future. So we might have a bull run of the dollar and then get to here, and obviously we'll cross that bridge if and when we do come to that. But yeah, I do like the fact that that's resting above that high. So on the weekly, if we just recap from the higher time frame downwards, this was the break of structure to the upside, the high, the low, lower high, lower low, higher high, came into a discount, and now we've created internal bullish structure. We've then had a discount of this leg. So this is why I'm saying these highs are likely to be taken, just judging from the higher time frame structure. It's as simple as that, really. What we've also used as well is this. This is a weekly imbalance. We've used that here, then we've used it once again, and you can see the accuracy. Look how price has just reached into that and moved away. So with that in mind, obviously GU could be coming down lower. Well, I'll discuss that in a moment anyway. That was my sort of theory anyway, that GU could come lower. Euro dollar could be coming lower. I've actually removed all of the euro dollar drawings, so we'll start from scratch on that, whether it be in this live or the second live this afternoon. So yeah, with that in mind, obviously those cross pairs could be coming down lower if this is to continue higher, of course. So we'll have to see what happens at these highs, more importantly. And we've also got that as well. We can't ignore that. We've got a weekly supply right there, which is a bullish candle before that bearish move. So price is obviously within here. We could continue up based on whatever news events come out, more than likely. So that's pretty much it for the dollar. Let's move on to GJ. So on pound yen then. On pound yen, what we're doing on pound yen, obviously continuing to put higher highs and higher lows into the market. If we remember from a higher time frame point of view, we are still inside this monthly bearish imbalance right there. Okay. What we also have right there is that monthly supply candle, which price could be magnetized into. So again, the bullish candle there before the bearish move. So we are obviously extended. We've closed above this high right here to confirm the bullishness of this leg. But where we will turn around, we'll have to wait and see. Okay, I do quite like the idea if we can turn around here. We've also got a weekly imbalance resting above there, but I do like the idea if we could turn around there potentially, this monthly supply. So with that in mind, let's go down into the weekly. Okay, you can see here as well, this is a monthly support and resistance line that I've basically gotten from the line chart. So if I go to the line chart, you can see we've tapped into it there. We'll wick into it there that time. So price has revisited this area quite frequently from a monthly standpoint. Alright, so this could be a magnet for price. So that's around 206, and then what do we have just above that monthly supply? So this could be where we run into within the next couple of months even, maybe even less. So on a weekly time frame, we can see that, I'm just going to remove this a moment. We can see that we're currently trading above this area that was created, sort of minor resistance we can call this. We're now trading above that once more. Okay, and we wicked into this as support, and what we've also done now is wick into this. So I'm actually just going to copy and paste this area right there, look. So this is a weekly level of support, a minor level of support. So price has found it once more, wicked into that area and moved away very nicely. So if we just make this visible on the daily and the 4 hour, similar to this one, daily and 4 hour, how we've used these areas as support. So if we now go down to the daily, you can see that's what price came into, along with that daily level right there on this particular one, number one. And then number two, you can see this was a weekly level, but it was also a daily level of support as well, because we had daily bodies and it was weekly bodies. So understanding that, then price wicked into that weekly level of support. That would have been a really, really nice area to trade out of. Actually, that was, yeah, so we actually did, sorry, my mistake, we did enter a trade out of here, if we remember. If I go to the 30-minute, yeah, that was the trade right there. Because we entered this, I remember doing it now. We entered this last Friday as I was starting the 3:30 p.m. live session, because you can see there the entry was at 3:30. So this is the 30-minute time frame. So if I just hover over that candle, that opened at 3 p.m, you can see the bottom, and closed at 3:30. So we entered that together, and as price moved away, I put the stop to break even. Unfortunately, price came to entry and then moved away. But yeah, that sort of backs up that idea of what I've just said. Is that would have been a really, really nice entry to buy out of, which of course we did do that, so that's fine. You know, trade management and risk management go hand in hand. Sometimes there is going to be money left on the table. It's just something we've got to take on the chin. So the next areas in which I'm looking at, you can see I've got this area right here as well. So two bodies. This was a significant level where price struggled to close above. From the 28th of May, so Tuesday the 28th of May, up until this here, so the 14th of June. So a couple of weeks, okay, basically. So price created that area, came back down into this weekly red grid level, moved away. We had wicks to the upside, dragged it back down into this weekly grid support, and price has moved back to the upside. And it's looking like we might use this area as support, because look at what today's candle has done. It's just wicked into there, and we're currently here right now with 8 hours and 20 minutes left of this day to close. So the nice thing about this is we can see we initially closed. This is why I really do pay attention to the body closures, the candle body closures, or the candle bodies themselves. If I zoom right in, you can see this candle here. So Tuesday the 18th, so this week on Tuesday, we closed above that area, and you can only see that if you zoom right in. So it's very, very important to look at the details of the price action. So the moment we closed above there, that told me that there is a chance that we can go higher. So obviously the next day did exactly that, and we've remained above this area, and now we are trading, as I've just said, above this weekly area as well. Okay, so we're trading above this weekly area as well. So with all that in mind, what area am I looking at to trade from? Well, it's that area right there. I've just put a dot on there. I'm still, basically, if price comes down into there, I'm going to look for a buy from here, without shadow of a doubt. Why am I going to look for a buy from there? Because from this low, I'm not going to say from this low because we did have a pullback into a discount. If I go to the 1 hour, you're going to see that. That's what these yellow dots are. Had a high, then we came into a discount. From this low, we have not yet achieved a discount. If we drag it to all of these highs, we've not yet achieved 50% or lower. So by dragging it from there up into there, let's just go to the 4 hour time frame. We should still be able to see it. Even on the daily, we're still going to be able to see it. Let's just take this away, actually. That monthly imbalance. So from this low, let me just highlight what I'm talking about here. From this low to that high, we've not achieved the discount. What do we have in a discount? This daily area. So that's why I'm looking at that. Obviously, price from where it is now can easily just continue to the upside. Easily. And the reason why I say that as well is because, number one, we're trading above the weekly area, this red line. We're trading above the daily level of support. We've wicked into it as support. And also, on the 4 hour, what I've noticed is we've just wicked into this 4 hour imbalance. Okay. But with all that in mind, I am still waiting for a pullback. And the nice thing about that as well is if we pay attention to this 4 hour area, 2 bodies, prominent high. So price made this high and then came down 269 pips. Alright, so let's just call it 270 pips from this high right here. Bring in that area, the 2 bodies of the candles. You can see how that's been a very, very significant level for price. We've wicked into it, 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 bearish candle. Yes, we've filled this, but we've still got room to come down to the downside. So what I'm going to do, I'm just going to leave this area on here. You can still see I've got an alarm on this horizontal line. So if and when price decides to come down into here, I'm going to be aware, I'm going to be alert, and I'm going to be ready to take a buy. This also aligns with the fact that GU wants to come down lower. So let me get into that right now. So let's go on to pound dollar. So if we remember on pound dollar, these are the daily areas in which I'm looking at. Again, I've just got the dotted, I've just drawn a dot on the areas in which I'm looking at. Or waiting for, I should say. Why is that? Well, because we're in a, we've not achieved a discount. We're in a bullish market from a higher time frame perspective. This is a daily leg. This is also following bullish structure from these lows down here. Low, high, higher, low, higher, high, higher, low. That became the new leg because from this low to any of these highs, we didn't achieve a discount. From this high, we did. So this is basically an internal bullish leg. That's what I'm seeing it as. Now, even if I was to get into a buy from down here, I'm not going to then target this high. I'm going to target an internal level. That's just the way I like to trade most of the time. Because that way, you're pretty much securing your money without expecting new structure to be formed. Because even from here to up, let's say up to there, in terms of pip distance, you're looking at 200 pips. And then to that one, 233 pips. So you're still going to get a decent move. So that's basically the idea behind it. On the weekly, also as well, obviously those drawings have now disappeared because I've not got them visible on the weekly time frame just to clean things up. But you can see this weekly level of support runs straight through this area. So just keep a note of that price, 1.25489. If we go to the daily, That's right there, that red level. 1.25489. So anywhere within here, if we can form the confirmation pattern on the lower time frames, I'm going to get into the buys. It's as simple as that. It's as simple as that. On the USD CAD currency pair, what we've done is, if we remember, I was saying about if this low is to be taken, then this would be a confirmed 4-hour bearish structure. Well, we've done just that. Okay, we've done just that. And if we remember as well what we're coming out of, yearly resistance, monthly resistance, weekly resistance, and now price has put in a new 4-hour structure, bearish structure, high, low, lower, high, lower, low. Granted, this low hasn't been taken just yet, or this, but I'm still counting this as 4-hour bearish structure because we've had a closure below that low right there. That's why I've got the dotted line there, just to represent the continuation of bearishness, so to speak. If we just go to the monthly, just to recap, even the yearly, 12-month time frame, very, very simple support and resistance. The 12-month areas I've got on thicker lines, 1, 2, 3. Price has reacted from this 1 year, 2 year, 3 year, 4 years. Okay, this is the 4th year that price has bumped its head on this level. On the monthly, coming out of this area, so the actual specific month that price ran into this area was April, looking at the bottom of the screen right there, April. And then May dragged to the downside, June spiked up into this newly found monthly resistance and has been dragged back down. So it's looking like the bullish momentum is starting to fade. Coupling that with the weekly, this is the monthly resistance right there. We've got weekly as well. I'm actually going to take that off. Monthly resistance, what we've just seen right there. Obviously we're zooming in one more time frame so it looks a bit different. That's the weekly, the monthly resistance on a weekly perspective. Price has come, reacted from it. It's tapped into here once more. This is the weekly support area. So obviously it tapped into this last week and now we're revisiting it. I don't think this is going to do anything in terms of putting a new high. I really don't think that. If it does, that's great. But what I'm favouring is this. So on the daily time frame, let me just take this off a moment on the daily. On the daily time frame, this is the daily resistance I am looking at to sell from, by the way. To sell from. I've got that area on there. Price could use that for a, I don't know, some sort of spike and move away, whatever it wants to do. I've just got that on there for technical purposes, technical analysis purposes. But this specific area I am actually looking at buying, selling from. Right here. Alright. Why? Because that follows the 4-hour bearish structure that's just been printed. And not only that, it's also a 61.8% retracement level of this bearish 4-hour leg. Now to me, that's clean. Like that's a nice setup. If we can get a confirmation there to go short, I'm going to go short. And I'm going to target number 1 there, number 2 these lows, and number 3 this area right here. This is a 4-hour imbalance, by the way, with liquidity above. Like so. So this could be a magnet for price. And another magnet for price could be all the way down here at the weekly level, the weekly imbalance, with all of this liquidity resting above. Okay. The reason why I would target that as a TP is because price could just react from here to make another leg before going to the downside. It's all well and good targeting that, but we have to be aware of what price could run into, because once it takes that low, for example, or even these lows, it could want to reverse, have another leg, at which point would probably be stopped out at break even. This is why it's important to take money off the table as we sort of reach these areas, because there's no point trying to be a hero within the market, because you're going to get humbled quickly. So that's what I'm looking at on here. Also, the 61.8% extension aligns with this area, but it's not just any area. Let me just highlight this to you. Let me just go to the weekly. It aligns with this weekly support. So we're on a weekly time frame right now. Weekly bodies, wick through, close below, close above, come back through, retest, support and resistance, retest, move away, comes into monthly resistance, looking like we're going to print a weekly bearish 3-pin pattern. What does that mean? It means that there is a chance, or a high chance, that price is going to continue to the downside. It isn't a 100% formula, but it does happen quite frequently. Let me just give you some examples. We've got a weekly 3-pin there, away we go. We've got a bearish weekly 3-pin there, down we go. We have a bullish weekly 3-pin there, up we go. We've got a bearish weekly 3-pin there, the following week, bearish. Runs into that weekly imbalance. So this is why everything conjoins into one, obviously. Bearish weekly 3-pin there, moves down. You get the picture, okay? It does work. So that's what I'm looking at. So let's just go back to the 4-hour to highlight the point I was trying to make, is that weekly support aligns with that extension. So in an ideal scenario, we'll come up to there, have some rejections, move away, get into a sell, target something like this, target this low, target that low, or even that imbalance, whichever you decide, and then ultimately all of these as well. Okay, so that's what I'm looking at on USD CAD. Very, very nice price action. I know we took a loss at the beginning of the week, but that's fine, because with this style of looking at the market, it gives incredible hints as to what's going to happen. This is why every single trade I'm taking with confidence. Every single trade I'm, not thinking, oh, I don't want to take this trade, or I'm not really confident in it. I've got full confidence in every single trade that I take, win, lose, or break even. Why is that? Because I've got the data to back it up. I've got the experience to back it up. I know that I'm not going to win every single trade. Not every trader wins every single trade. That's why the risk to reward is very important. Very, very important. This is why we go on the lower time frames to look for an entry, so we can get a smaller stop loss to really maximize the profit potential of those profitable trades. So that wraps this live session up. What we're going to do on the second live session of today is we're going to go through euro dollar. Again, like I've said, I've removed all of the drawings on there, so we're going to go through that from scratch and look at where we could be running into. We're going to go through silver and potentially even gold if we get time, but I just want to highlight some things on euro and silver. So thank you for watching. Thank you for your time, everybody. I appreciate it, as always. If you've got any comments, suggestions, etc., etc., please feel free to reach out. We're always open to hearing your comments or things that you'd like us to do or go over. But other than that, thank you for watching once more, and I will see you in the next session. Take care, guys. Cheers.